Buying dividend stocks is good because you know the company has good cash flows, but don't confuse dividends with total returns. Alright, ladies and gentlemen, welcome back to the Honda Show. This is your very own Honda here. Today we are going to talk about pros of buying dividend stocks. Investing, like everything in life, is very complicated. Even people who are seemingly smart, are very good at their professions, make very bad choices, which ends up hurting them, hurting their families, and life is just miserable. But if you learn about investing and do it right, it can make your life a lot easier. Investing is not about doing complex things. It is about doing easy things. The markets, they don't give you a higher return or a higher reward just because you did something really complex. In investing, you want to find a fence that's 1 foot high and step over it, and not try to jump over a fence that is 10 foot high. Most people think entrepreneurship is about taking very high risks, and the higher the risks, the higher is the reward. But in actuality, entrepreneurs, they don't like to take risks. Entrepreneurship is about minimizing your risks and maximizing your returns. So I'm not trying to do anything complicated or risky with my returns, and nor should you. Archaeological evidence suggests dividend investing has been around since the time of Paleolithic man. When you buy dividend stocks, don't just buy any stock that pays you a dividend. Buy good quality companies in structurally favorable sectors and with structurally sound business models. Companies in the financial sectors like fintech, brokerages, and then premium alcoholic distillers, these are my personal favorite dividend stocks. Companies in the financial sphere and premium alcoholic distilleries, they produce consistent cash flows which never go away no matter what the investment climate is or what the economic situation is. You can buy these stocks, go to Mars with Elon Musk, come back, and the companies would still be around and your dividends would still be dripping back into your stocks. Second important thing in dividend investing is, other than the dividend, what does the company do with your retained earnings? And when they invest those retained earnings back in the business, do they get above market returns on those investments? Reinvestment of those returned earnings, that is one of the big factors that will determine what your total return on that stock will be. The biggest factors that help you as a private investor is you don't have to have an opinion about everything under the sun. You can keep your focus really small and buy companies in very small spheres or sectors and still make acceptable returns because you don't have to make presentations to preserve your jobs. The second important thing that helps you as a private investor is your long-term focus, because you don't have to report your returns every quarter compared to what the index did. After World War II, for a long time, dividends were out of favor, especially because of taxation. Dividends were taxed at a much higher rate, so people didn't really want the dividends because they had to pay taxes. They would much rather have share buybacks. Or if the company had the opportunity to reinvest the earnings in the market and earn above market returns, people would much rather prefer that. Reconciliation Act of 2003, it reduced the maximum rate on dividends from 38% to 15%, which made dividends really popular. Another provision in the bill lowered the top rate on long-term capital gains from 20% to 15%, thereby equalizing the rates of long-term capital gains and dividends for the first time since 1990. The upfront yield on stocks is greater than the upfront yield on treasuries for the first time in last 50 or 60 years. Everybody saw stocks as vehicles for capital gains, especially after the long post-World War II period. Dividends are back in vogue now, especially after 2008, 2009, and with the low treasury yields, everybody wants them. Buying dividend stock is good, especially if you buy them in companies that have consistent cash flow with which it makes those dividends, but don't confuse dividends with the total return that you expect to get. Instead of just hunting for dividends, try to find companies that are giving you dividends but still have the opportunity to invest the retained capital at above market rates of return on that capital. Dividend stocks, they also act as a good ballast in your portfolio because in rough times when stock market tanks, you're not as tempted to sell these stocks because you know you will get your dividends every quarterly or semi-annually, and you hold on to them. So that helps you. Dividend stocks is a great way of accumulating wealth. You have to buy the right companies at the right price and make sure you hold on to them for decades. Not days, not weeks, not months, not years. Decades. The only time you want to buy stocks like these is when you know you have the patience and you don't need the capital and you can hold on to these stocks for decades or years at a time. Don't be over concentrated in a few stocks. Make sure to buy quality companies with great balance sheets and who have a history of dividend increases for a long time. Historically, they say about 40% of the stock market returns have just come from dividends in the last 100 years. Don't try to time the markets. Be invested at all times. Look at the slides on the screen. Let it soak in for a little bit. This will help you realize how difficult market timing is, and you should never try to time the markets. Just keep buying consistently all your life. The stocks of dividend companies, they have produced higher returns with much lower volatility. Just think about it this way. How hard do you have to bargain with your boss to get a 5%, 10% raise? When you buy dividend stocks, you just buy them. When you buy dividend growers, you just buy them and forget about them. The income just keeps coming in, keeps growing, and keeps compounding over time. Dividend stocks are also great for people who don't have time to mess with real estate because real estate takes time. One of the biggest reasons of buying income generating assets is you never have to sell them because you have the income that you can use. One of the biggest fears that people have is they will run out of money in their old age. When you have income producing assets, especially in the early part of your retirement, if you have a down market that lasts for years, you can depend on the income and you don't have to sell your stocks because that is permanent destruction of capital. Like I mentioned in my previous video, if you buy a company that operates in the commodities sector, buy the whole sector ETF or the whole sector mutual fund. Don't try to pick stocks. Don't try to pick individual companies in the commodity sphere. Unless you know that company in the commodity sector is the lowest cost producer of that commodity, then you can buy it. Otherwise, don't buy it. Buy the whole sector. Now that I have taught you about how to think about commodities, if you buy any other stock for your dividend portfolio, make sure it has some good brand or some sustainable competitive advantage, which helps it charge a premium for its own products compared to its competitors. Because that's the only thing that will safeguard your dividend and dividend increases. Keep your dividend investment strategy really simple. Invest in companies that increase their dividends every year, reinvest those dividends, let the money compound over time, focus on dividend growers, look at the list of dividend aristocrats. One of the best ways of accumulating dividend stocks is to accumulate them in tax protected accounts like 401ks, IRAs, HSAs. Once the company starts paying dividend, it is seen as an implicit promise by the market that the dividends will be paid for all times. This helps in keeping a leash on management because they don't do wasteful capital expenditure. They try to do better capital allocation because they know they have to pay the dividends. Usually the companies that increase their dividends over decades or over years are companies that are in favorable sectors of economy, which helps them compound their earnings over years. Dividends have no impact on the total rate of return on the stock, but it helps you in knowing that the company has predictable cash flows to pay those dividends. Also, when you buy income producing assets, it's easier to hold on to them because you don't have to find somebody who's dumber than you to make some money. All right, let's conclude the video. So people generally historically have had good experience with dividend stocks because when they buy dividend stocks, inadvertently they end up buying value stocks, companies which are quality companies. Historically, people have had good experience with buying dividend stocks because when they buy dividend stocks, they inadvertently end up buying companies which are value companies, which are quality companies with low volatility. Once a dividend has been initiated, it's like an implicit promise. So the managements, they don't like to cut dividends. So it's much more sticky. It doesn't go up and down much with earnings. Even though managements, they don't like to cut dividends, but sometimes they have to cut the dividends. So try to buy companies which have a long period of dividend increases. So look at the list of dividend aristocrats. It's a nice place to start. Look at the list of dividend kings. And if not those, at least look at companies which have had dividend increases for 10 years. Like I've told you in the earlier part in this video, some of my favorite stocks, dividend stocks, tend to be in fintech and in premium alcohol space. They produce consistent cash flows, they increase their dividends all the time. So I'm gonna put up on the screen the list of stocks that I like. So keep them on your list. When the stock prices go down, they correct a little bit, add to your portfolio, you will not be disappointed. When you end up buying most of these stocks that are on the list, it's like owning a liquor store without having to go to work for making that money. The money will come in, you have your own liquor store inside the computer. So I'm also going to put up on the screen a couple of the ETFs that I like. If you want to add these, this is also another great way of getting some dividends in your portfolio. So today my emphasis in this video was to give you all the pros of dividend investing. If you like it, give me a thumbs up. If you have any questions, comment below and I would love to answer them. Very soon I will come up with another video which will tell you the cons of dividend investing. So hopefully you'll watch that and you'll make a good educated guess and keep investing money and grow richer every day. Happy investing. See you in my next video.